Hello everyone, this is Alexander Horat. Before we begin, if you could please subscribe to the channel and leave a like on the video, that would be great. Today we're having Rick Rule on the show. Rick Rule is one of the most respected and experienced voices in natural resource investing with over 5 decades of experience navigating gold, silver, energy, and the mining market. Hello Rick, thank you for coming on the show.
Pleasure, Alexander. Nice to be on with you.
Yeah, that's great. One thing a lot of viewers are asking about is we're seeing historic highs with gold and silver lately. It's huge news, so I just want to get your thoughts on that.
I think it's been a long time coming, frankly. Uh, Gold, in particular, I would suggest trades primarily as a consequence of investor and saver uh, confidence in the purchasing power of fiat currency denominated savings instruments. I would suggest that the strength in gold price is a reflection of the fact that people are concerned about the maintenance of their purchasing power in savings instruments denominated in US dollars. And I think the reasons for that are very valid. And I think they'll continue, unfortunately. As an American citizen, I wish I could look at you and say that your savings denominated in US dollars, like the US 10-year Treasury, were very sound, but I can't. I wish I could say that I thought the gold price was going down because that means that the rest of your portfolio would go up, but I can't. It's my belief personally, Alexander, that the purchasing power of the US dollar over the next 10 years mirrors its decline in the decade of the 1970s. In the decade of the 1970s, according to the Office of Management and Budget, the purchasing power of the US dollar declined by 75% in 10 years.
Hmm.
Sadly, I think that's the way that we're headed again. If that's true, I'm not saying that because I think it's true, it is true, but if that's true, I believe that one could reasonably expect the increase in the nominal price of gold, which is to say the US dollar price of gold, to mirror the decline in the purchasing power of the US dollar, which would suggest an increase over 10 years in the nominal gold price of between 2.5 and 4 times.
Oh, that's definitely good to know. I think inflation is definitely going to cause the prices to go up, as you said. One thing I was curious, so we see platinum and palladium, they're doing quite well. They're actually going up quite a bit. But in older, not too many years ago, platinum and palladium were actually better than gold. I mean, price-wise. So do you think we'll ever see platinum and palladium go higher than gold again?
I have no idea, to be honest with you, although I think that all the metals will do well. People suggest, probably rightly, that gold is outperforming other so called precious metals because it is a more broadly based mechanism for defending your savings against inflation and negative real interest rates. It's important to note, however, that platinum enjoys that status too in some other cultures, Japan, Korea, and some parts of China. It is not true that platinum and palladium are not precious metals. They are, in fact, precious metals. And to the extent that the whole precious metals complex gains favor, one would expect the currency role, if you will, of platinum and palladium to increase, at least relative to fiat currencies, if not in relation to gold.
Okay, so the Fed just lowered interest rates again. Do you think they'll continue to lower interest rates in the future? And what effect is this going to have on the U.S. economy?
Sadly, I think they will, and I think it's idiotic. Uh, the signal that the US political class, and for that matter, the US voters have made to savers and investors around the world, is that they don't care about the integrity of the US dollar and its purchasing power. Uh, the Keynesians would suggest that you lower interest rates and you use monetary pressures in a weak economy. But we don't have a weak economy.
Yeah.
This is purely political. Make no mistake, Alexander, declining interest rates are a subsidy to spenders made by savers. In our country, sadly, there are many more spenders than savers. In a democracy, everybody votes for their own interests. And so the spenders are happy to penalize the savers. In this case, it reminds me sort of the old libertarian description of an election. which is where four coyotes and a lamb vote on the lunch menu. In this particular case, the savers are lunch, the spenders are the coyotes.
Yeah, I think that's too bad. I guess that when they get 51% of the vote, then they can basically enact legislation like they want to. So do you think they're just planning to just destroy the US dollar? It almost seems like a self-inflicting wound that they're doing on us.
I don't think they care about the US dollar. I don't think they care about the US economy. Uh, People who would like to buy a home, who don't generate, for whatever reason, enough economic utility to afford a home, would like their interest rate to be subsidized. Corporations who don't earn a high enough return on capital employed to be successful without artificially low interest rates would like more prudent businesses to subsidize them. The US government, which owes 38 billion, oh, pardon me, trillion dollars of on balance sheet debt, would prefer to pay that debt off with artificially low interest rates. In every case, the spenders are organized against the savers.
Hmm. Yeah, so if this policy continues, when do you think the final destruction of the dollar will be? How many years do you think it'll take?
I think that the US dollar will still function as the world's reserve currency for the balance of your, not my, lifetime.
Hmm.
When I talk about the absolute destruction of purchasing power of the US dollar, I'm not talking about the relative destruction. I think over the next 10 years, the US dollar will do okay against the euro, against the yen, against the renminbi, against the Swiss franc, against the British pound. I think it'll do absolutely poorly, but I think it'll do okay relatively. In the period between 1913, the year of the establishment of the Federal Reserve, and today, the US dollar has lost 97% of its purchasing power.
Wow.
I believe over the next 10 years, it loses 75% of what's left. But
Hmm.
I don't believe it's going to go to zero. I believe that a young person like you who is saving needs to maintain some liquidity in dollars because that's what you spend. But I believe that you need to save in gold because that's how you maintain your purchasing power. At the end of the day, likely 10 years from now, when you buy a cup of coffee at Starbucks, you will use a US dollar. Perhaps you, having better education, will use a gold token on your phone. But I don't think that you will see the utter demise of the US dollar, either as a medium of exchange or even a less effective store of wealth. What I do see is that in terms of portfolios, you will see a disintermediation out of dollar denominated savings products and into gold by more and more people.
That makes sense. So, do you think it's better to save in gold than silver? And what are your reasons why?
I regard silver as a speculative asset class. I save in gold and I speculate in silver. I think that silver will outperform gold now. One feature of a precious metals bull market that I've observed three times in my career is that when the precious metals narrative has been verified in the minds of generalist investors by momentum in the gold price, and the generalist investors come down into the precious metals markets, that silver begins to outpace gold. Silver this year, in terms of its price advance, has increased at a rate almost double the price of gold, which would suggest that that crossover has occurred. That notwithstanding, from my point of view, silver is a more speculative asset class. I'm not a speculator in my savings account. I save in gold. I speculate in silver. More properly, I speculate in where I have the ability to the silver stocks, which in prior bull markets have outperformed silver almost 2 to 1.
Yeah.